You could never be a sell-side analyst because you actually said something last time you were on. You actually took a position,
right?
And I mentioned it earlier.
Right.
And I'll bet you got some flack too, because the headline was Larry Fink predicting a melt-up, not a meltdown. And there's so many people that are sure that this is all artificially Fed-induced gains and that the fundamentals don't match up with the equities. For you to say that, you put yourself out on a limb and really stuck your neck out. Like I said, a sell-side analyst would be, well, you know, it might go up, might go down, could stay the same. You know, they never say anything because their main thing is keeping their job. But I thought you probably got some flack for that, but you were right. And now you're saying it again.
Yes.
Which is significant, even at these levels.
At these levels.
You still think there could be a melt-up, or at least maybe not a melt-up, but trending higher.
Markets are going to trend higher. I do believe if you wanted to, frame where the market's going to be for the next 10 years, I would be betting on the rest of the world will catch up somewhat to the U.S. when you see these big shifts. So much of the market gains have been U.S., which for good reason.
We deserve it.
We deserve it. We have better companies. We deserve it also because we did more fiscal policy than other countries. Other countries were heavily reliant on just monetary policy.
Right.
And I think that's going to be the issue. I know that we're all anticipating a change at the ECB. I hope Christine Lagarde actually pushes some of the governments to start focusing on more fiscal policy.
Is it definitely her?
I hope it is her. I think it's highly likely.
I'm not optimistic about her. Some of her comments in the past were, I don't know.
Well,
she's like elitist, globalist. I know.
I'm a globalist too, Joe.
I know. Yeah, but you appreciate the fiscal work we've done in this country, and yes. I don't think you're talking about it as Keynesian stimulus, just throwing money at something. You're talking about deregulation. You're talking about even tax reform and all these things. That's what you mean by fiscal, right? You
I also believe fiscal policy is a better tool for more.
What kind of fiscal policy?
Let me just
infrastructure
finish. Yes, no, but let me finish. I think fiscal policy does more for an economy than monetary policy. Monetary policy has limited tools. It monetizes financial assets.
But what do you mean by fiscal policy?
Well, let me just finish.
Okay. I just need to know.
I'm trying to help you.
I know. It's hard.
Monetary policy monetizes financial assets.
Right.
Bonds and stocks. The general population does not own bonds and stocks, especially in Europe and Asia, and I think this is one of the structural issues. 82% of savings in Europe is in a bank account. China, almost all savings is in a bank account. So when you stimulate the economy through monetary policy, it's not impacting the majority of people. But fiscal policy through some form of tax reduction, some type of redistribution through infrastructure, by creating jobs that way, that will lift more people in the economy. And I think this is one of the structural issues that we're going to have to live with. And, and I think this is why Europe has not been able to get out of its problems. It has been way too reliant on monetary policy. And when 82% of savings is in a bank, they have negative return now. Do you think that's going to stimulate more consumption?
Right. No.
Well, we haven't done infrastructure here, so the fiscal policies in it, right, and the ones that have paid off were the former of what you talked about, and that's tax reductions and things. Okay, so we haven't done that yet. That is one of the reasons why income inequality here has gotten worse over the past 10, 15 years, because the people with the assets, though not as bad as Europe in savings, there are 401ks here. There are some people that participate in that.
What is our savings? If Europe's 82% and China's basically everything, how much is it here in the U.S.?
So 82% of all their savings is in a bank account.
What is it?
We have much more. Europe does have pension funds that are much more, state-run.
Right.
But we have a much stronger, much better equity culture in America versus any other country. Yep. And that is why U.S. stocks trade at higher PEs.
Yep.
So all the fundamentals for the U.S. means we'll have a stronger economy.